The local exchange, together with the rand, were under pressure in early trade. The JSE tracked the global equity slump on Wednesday as the sell-off after the collapse of Silicon Valley Bank regained momentum from fresh turmoil at Credit Suisse. Zwelakhe Mnguni is Chief Investment Officer at Benguela Global Fund Managers, and he joins us now for the very latest market moves. Thank you very much, sir, for your time this afternoon. So the local index looks to be regaining lost ground, but the rand is still flat. What's driving the weakening there?
Yeah, I think if you look at what broadly speaking, I mean, there is a reprieve, a sense of reprieve coming through about clearly that interest rates in the US Fed and the ECB are likely to be at best maybe 25 basis points, and we might even see a halt in the two central banks. And I think what we are seeing is that there is also a concern around the actual global economy, the state of the global economy, as banks are starting to struggle, and it may lead to banks refusing to lend because they have to keep the liquidity. And that would have a material impact on the actual economic growth, and that would threaten things like resources. And I think we are seeing our resources sector today being under pressure.
Remgro's shareholding in Discovery and Momentum Metropolitan is under scrutiny at the Competition Commission. What's going on there?
Yeah, look, I think because Discovery buys services, Metropolitan, Discovery, they all buy services, for example, from Mediclinic. There is a concern that there may be a conflict of interest between the Remgro's ownership between the three companies. I certainly think that conflict has been managed well in the past, but they are, in any case, probably going to look at how they can divest, probably from the insurance side, given that they've taken Mediclinic on board now. They'll be buying Mediclinic completely out of the market.
Exxaro Resources has reported a 28% jump in annual profit driven by higher coal prices. Let's make sense of the numbers.
Yeah, so their revenue was up strongly. I mean, they realized quite a nice price improvement in the past year. So their revenues were probably up about 40%. I think what was also or what held the result back to some extent was the struggle with the load shedding, and I think that's affected. Have taken the plant production side. I think the second thing has also been the challenge of getting coal, export coal to Richards Bay to get it out of the country for export markets. I think those two things have been a feature. We've also seen that the cost have increased, the cost inflation has increased. They seem to have managed that cost inflation relatively better than the industry. I think they 1% below the average for the industry, but certainly they are also feeling the brunt of what is happening in the country in terms of infrastructure.
So Libstar reported a big drop in operating profit and lowered its dividend. Talk to us about that performance.
Yeah, so Libstar is a contractual producer for the likes of Woolworths, where they produce some of the canned foods for those type of clients. I think they also export some of the products to the offshore markets. What has been a major factor here is that their perishables business has been under quite a lot of pressure. I think last year they were affected by a low fruit availability in the country because of the challenges on the drought. So the numbers that came through were relatively in line with what they guided, but I think it's starting to look like they are getting the pressure because they are a high fixed cost business. With the low volumes coming through, they will struggle to actually get the benefit of scale. So that is what has put pressure on their profitability.
Zwelakhe Mnguni of Benguela Global Fund Managers, thank you very much for your time this afternoon.